Hello, welcome to the weekly chart review. I'm Selena Nicholas, technical analyst at XM.com. Today is March 2nd, 2016. The Canadian dollar staged an incredible recovery since the start of this year after reaching its weakest level in over 12 years. So if we look at the USD CAD chart, we're on the daily chart now. You can see the pair has been falling since the high of 1.4689. That was in January, and it fell to a low of 1.3385, a 3-month low this week. Prices are now close to the 200-day moving average, and this would be acting as support for any moves to the downside. So around this level at 1.3302, the 200-day would act as support. The bias to the downside is quite strong, because if we look at the RSI and the MACD, it's below zero. So these are bearish signals. And also USD CAD has retraced more than 50% of the up leg from the October low of 1.2831 to the January high of 1.4689. So it's about halfway down right now. It's also approaching the Fibonacci level of 76.4 of this up leg, and this level comes in around 1.3226. The market would need to clear the 1.40 area, a key psychological level, in order to shift the bias to a more bullish one. Because if we look on the long-term chart, the weekly chart, we could see that the pair was in a steady uptrend till this January high, more than 12-year high for USD CAD, but it fell below this key 1.40 level the start of this year, and it's been falling since. So if prices move back up above 1.40, we could safely say that the uptrend would resume. Now let's look at another Canadian dollar pair, the Euro CAD. Again here, some big gains for the Canadian dollar against the euro, which means Euro CAD fell from a high, more than 6-year high of 1.6103. The market has turned increasingly bearish after breaking below the 100-day moving average of the sharp decline. And then this week, yesterday, we had it fall below the 200-day. There is currently support at a key Fibonacci level, the 50%, and this was of the up leg from the low of 1.3021, that was back in April, to the high 1.6103 in January. So if we look at this Fibonacci level, it's currently acting as support. A break below this would bring into sight the next Fibonacci 61.8. This level is 1.4197 RSI. It's giving bearish signals. It's below the 50 level. And MACD is also falling, and it's below zero now. So it's looking increasingly bearish now. The downside bias is gaining momentum. If we look at the weekly, longer term chart for Euro CAD, it was in an uptrend till January, but since that fall, it's now at a critical level here, and it's actually touching the trend line, and this is like a ascending support line, so it's at an important level right now on the weekly chart. Now let's look at another pair. It's the New Zealand dollar versus US dollar. The Kiwi Dollar, it remains in the range here on the short term daily chart since the beginning of February. It's trading between 0.6543 and 0.6773. So we could say there's a neutral bias, and the indicators, the technicals, are supporting this neutral bias. We could see MACD, it's leveled off, it's horizontal now. RSI as well, it's leveled off. And if we look at the moving averages, we could see the 50-day blue line, and the green is the 100-day. They've also leveled off their horizontal, so this indicates there is no trend. The market, it's basically pivoting around the 50% Fibonacci retracement level, and this is of the down leg from 0.6881 down to 0.6346. So the market is around the halfway point of this decline. Now, if we look at support and resistance, we could see that the 200-day moving average, it's capping the market to the upside, so this is quite a strong resistance level, as well as coinciding with the 76.4 Fibonacci level. And to the downside, support lies at the, immediate support is at 38.2, and it's close to the lows of the range that were hit, 65.43. So this is also an important support level to the downside. If we look at the longer term, we could see that prices have stabilized. They're more or less neutral now after a big decline from July 2014. Thank you for watching, everyone, and have a great day.